What's going on to the AMC stock family? I just want to come on here very quickly to talk about some price targets that are going around, and one of them is actually $0. Yes, you did hear that right. It is very surprising, but over here we're just going to be talking, debriefing some points that this one author says that is basically part of his article. He says, what's a share of AMC Entertainment really worth? And then we have some key points right over here. We are not going to read the entirety of this article, but I do want to talk about, again, some key points because this will probably create some paper hands, and this is not what we need heading into 2022. Quite honestly, with the paper hands they're left in 2021, a lot of them decide to sell out of their position. And again, that was just because it was difficult for them to hold this equity long term. However, 2022 will probably be a different year. Now, the other point that he mentions is that its shareholder equity is deeply in the red, and multiple data points suggest its shares could eventually head to $0. So this author starts off by saying a blueprint to AMC's historic gain. He does talk about a counter argument how AMC did indeed have a historic year, stating that one clear-cut reason is a short squeeze which occurred in late January and early February. He's attributing the insane amount of increase in share price AMC had to the short squeeze, and he mentions that a short squeeze is a very short-term event where short sellers, which are investors betting on a security to move lower, that is how they make their capital, you guys gotta remember that, feel trapped in their position and head for an exit all at once. To exit a short position, pessimists must buy shares to cover their stake. They need to buy shares to cover, coupled with already existing rising share price, creating part of the perfect storm that sent AMC shares markedly higher. So if you guys didn't understand how AMC actually went so high so fast, then there you go. Now we're also going to go over here. What is AMC really worth? With AMC hitting a market cap in 2021 that it's never come close to throughout its publicly traded history, it begs the question, what's a share of AMC really worth? If we go by the most cut and dry definition, it's negative $3.20 per share. Book value is one of many accounting metrics investors lean on to help value publicly traded companies, and one of them is also AMC because it is a publicly traded company. To determine a book value, you would add up the company's assets on a balance sheet, subtract all liabilities, and arrive at a shareholder equity figure that would be divided by total outstanding shares. So with all this mathematical calculation, this author is saying that it would actually be worth negative $3.20 per share just to own one AMC stock. Let's continue to see what else this author has to say. He says that at the end of the third quarter, AMC had $11.6 billion in total assets, and this included $1.61 billion in cash, $4.3 billion in operating lease use, about $2.3 billion in property, and $2.45 billion in goodwill. Keep in mind that goodwill is nothing more than the premium AMC paid above and beyond tangible assets when making acquisitions. If goodwill cannot be recouped, it's eventually written down, which can lower the value of the total assets. And comparatively, AMC ended September with $12.7 billion. It had $5.45 billion in corporate debt, $5.39 billion in lease liabilities, and various other expense categories that added up to $12.7 billion. Subtracting the latter from the former leaves $1.64 billion in shareholder deficit, with 513.3 million shares outstanding. This works out to a book value of, again, negative $3.20 per share, which would be the amount someone would pay just to own one share of AMC if we were valuing AMC from just the book value. Another way to look at this figure is that if AMC sold everything and has attempted to even repay every liability, it would be over $1.6 billion short at the moment, meaning that this is how much they would still need to pay. And last but not least, I know this has been a little bit long, but that was only because we were just trying to understand how this author got to that negative $3.20 per share mark. And again, it was because that book value, so we're just trying to understand all of that. Now let's go over here where he says that multiple data points suggest AMC could go to $0. Book value is just one metric in a long list of concrete data that suggests AMC stock is operating on borrowed time. Multiple data points imply that AMC could reorganize under Chapter 11 bankruptcy protection and ultimately wipe out common stockholders in the years to come. Let's begin with $5.45 billion in debt as of September 30th. Even with the company pushing many of its larger repayments out a few years, it is on track to pay about $437 million in interest expenses this year. That's an average of 8% interest on its outstanding debt at a time when interest rates have never been lower. The fact that it's paying a double-digit interest rate on more than half of its outstanding debt should give you a clue as to how risky lenders view the business as being. Speaking of cash, AMC has burned through $714.5 million through the first 9 months of 2021. The third quarter featured a $200 million decline in the company's available cash and a roughly 10% drawdown in remaining liquidity in one quarter. He also adds that the movie theater industry as a whole isn't doing well either, so everything that we mentioned in that last segment was extremely negative, but here is some more positive news. Now remember everyone, that was not my opinions, okay? We are part of the AMC stock family, and again, that was just not my opinions because right over here, I'm going to be explaining to you my perspective on all of this. And remember, I'm not a financial advisor. I just hold AMC equities for the long term, and I'll continue to dollar cost average. And remember, dollar cost averaging does not mean buying every single dip opportunity, if you guys even view it as a dip opportunity, because sometimes the dip can't keep on dipping. There are a lot of different ways I like to dollar cost average. One of them is simply looking at some technical indicators that provide you the information as to when you should probably dollar cost average. I have discussed that in previous videos, but I can definitely go over it again in some more upcoming videos. But regardless, let's talk about right now. The group leadership for AMC is ranked second in the group, and it is being compared to Netflix. Now, you have to understand that the company generating us this data is actually partnered with CNBC. So now that we got that out of the way, the fact that the company providing us this group leadership is partnered with CNBC themselves, we can understand that this really speaks volume for itself. The fact that it kicked out Roku, which again, some of you guys that have been subscribed to his channel for quite a bit, you guys understand that I always make this comparison because Roku is actually ranked second in the group. And not to even mention, Roku right now is $226.70. It was actually much higher before. I believe it was all the way at almost $400 per share, going all the way to $363. And I believe Roku even went higher than that, but this chart does not show it for some reason. And Roku is now ranked ninth in the group. Whereas Netflix, yes, it is still ranked first in the group, and then we could see some composite ratings, but I just want to talk about the earnings per share percentage change since last quarter for Roku standing at 433%, and we'll have the next earnings on February 18th of 2022 right over here. Now, very quickly, if we go ahead and check AMC, remember that 433%, and also I want to talk about the volume. The volume right now is at 3.8 million. Let's check out AMC. We're going to get the quote, and then right over here we see that the volume is 36.8 million. And let's check out the earnings per share percentage change since last quarter. It is much lower, but is still at almost a 100% change. This one is sitting at 92%. And again, Roku was much, much higher. But then why is the group leadership ranked second? There's some variable, there's some underlying principle that is allowing AMC to get so high in the ranking. This may be attributed partly because of the volume, because this is an outstanding number of volume amount of shares being traded currently, 36.8 million. Much, much higher than Roku. Maybe it's because the shares of AMC are much cheaper. Who knows? But again, that group leadership ranking, second in the group, we really need to pay attention to this because it used to be much, much lower. Now, you guys are about to hear Tom Lee speaking about the equities market and how he believes that the stock market should continue to go up, as well as the S&P 500.
Just heard one of my committee members call the move yesterday post-Fed nonsensical. Do you want to take issue with that?
Well, you know, one-day moves in markets are hard to explain. So I don't blame Jim for describing it that way. But to me, the reason I thought the market rallied yesterday is that the rationale the Fed gave for why they sort of changed their view on tapering, plus the roadmap for potential rate hikes. At the same time, that framework included the risk that variants like the Delta variant slow the economy, and if Omicron has an impact, that they could walk back this framework. And that's very, that's a template that the market understands and agrees with and doesn't think there's policy error. So to me, I think it's actually a risk on roadmap that he provided, because it's sort of saying, look, unless Delta and Omicron and other variants, don't sort of change the trajectory, the Fed could be tightening. But that's sort of what the market wants, is that a Fed that sort of still has the market's back.
Now, you're not trying to describe a Goldilocks environment, are you? Where even though we're having Fed tightening, it's what the market wants, it's what the economy can withstand, and yet it's going to be flexible enough in that environment. And by the way, we still have a lot of liquidity, even though they're doubling the pace of the taper. Let's not think that because they're doing that, all of a sudden the rain stops falling from the sky, right? They're still
Right.
doing that.
That's exactly right. He said it several times that tapering is not tightening. It's just not adding accommodation, which is different than removing accommodation, which is what rate hikes are. And I do think the market wants the Fed to be a bit of an inflation watcher, and that's very clearly stated. So if inflation is not going to track worse than expected, then the Fed doesn't have to act faster. And then if we have sort of, as you know, this looming uncertainty because of these variants and the transmissibility, that's going to create the uncertainty that keeps the Fed a little more dovish. And I think post confirmation, which is in February, we could also have a change in the character of the Fed. But at the moment, it's important for Powell to be reconfirmed.
So you're sticking with your call. I mean, that's the bottom line. 4,800 end of this year, if not even stronger, and 5,000 into the beginning of next year.
Yes. I mean, I know the time window has really shrunk because we're essentially only 2 weeks left of the year, but we know it's a strong seasonal. We're watching South Africa closely, but as you know, last week positivity started to roll over, and we're going to check the regional cases, but as you know, hospitalizations barely picked up. And then if you look at some of the sewage data in some cities, there's some evidence that potentially Omicron's burn through a lot of areas. So Omicron's very contagious, but then it burns through, and people forget there's another side of Omicron.